All right, folks, market concentration. You're looking at it right there, right? It's been a complaint for Wall Street mammoths for a long time, but it's only become obviously more intense, right? Now, the question is whether this current weakness in the Mag 7 and other mega cap names is sort of your periodic consolidation, as Mark Newton just talked about, or are we really now seeing a fundamental shift? I'm going to bring in JP Morgan Asset Management, their chief market strategist for the Americas, Gabriela Santos. Gabriela, listen, so we've got the concentration, but we've had concentration risk for a long time. What do you, I mean, is that in of itself enough to alter what we're doing here? Or, how do you work that into your work?
So we think about it as both an opportunity and a risk.
Okay.
In terms of an opportunity, these are incredible, very profitable, leading companies at the forefront of AI deployment and adoption.
Right.
So in that sense, this is not a .com kind of comparison.
Right.
But it is a risk because really the whole market becomes a lot more vulnerable to what's going on in a handful of companies and just one theme.
But here's the thing, though, and this is one of your charts, right, JP Morgan? So here's the conundrum. As much as that's a risk and get anxious because it's 40%, if you look at earnings expectations for the Mag 7 and these mega cap names have held up well going into next year with a 493 have plunged. So why would I rotate out of those earnings into these if earnings are the mother's milk of rallies?
So the absolute earnings, absolutely, and incredible to see this year over year, still 15% gain in Mag 7 earnings,
right.
But it's all about expectations. And I know that the market is back to all-time highs. However, things have changed in April. You see this massive plunge
right.
in expectations
right.
for the 493 from tariffs, so easier to beat, versus the Mag 7, expectations still elevated, haven't changed, easier to miss.
So you like the psychology of this, and it sounds like you're saying those low hurdles might create an opportunity to make money.
That's right, and It's all about what have you done with me lately when it comes to investing.
You wrote something in your note, though, I found interesting. You said, don't forget revenge of diversification in the first half of the year. What does that mean? What's the implications for the second half of the year?
Let's not forget what happened, especially through April, when we had a big risk-off movement. What sold off the most? Exactly the Mag 7, that were down 30% versus 10% for the broader market. Again, a lot about expectations and innovation in AI. So that's one example of we love concentration when it works. We got to be careful when it doesn't work. The other aspect is through April, value outperformed growth by 1,000 basis points.
Right.
So it makes sense to have that diversification in style. Lastly, in terms of international equities, still outperforming by 1,000 basis points.
I'm going to bring up a chart for that. I'm going to bring up a chart for that. But first, let me go back to this AI thing, because you still like what you call new AI. Do you say there will be new AI winners, right? So we're talking about moving beyond what have become household names and looking elsewhere?
I think it's which one of those, let's call it 7 names, are still going to be there 10, 15 years from now. Because think back during the last big tech innovation, the internet, only really one of those top 10 companies stuck around the whole time.
Well, actually, it died for a long time. You talk Microsoft. Microsoft was dead for a long time. Yeah,
that's a real interesting story.
And that's a great. I think that's also great. Whatever. Go to college. That should be a thing about management. About management, right?
Yeah. And then also, who else is benefiting from building this whole infrastructure? It's utilities. It's infrastructure. Right. It's industrials, and those are already gaining as much as Mag 7. I got to
quickly go to the banks, large banks, because you also say that this is sort of the sweet spot of macro policy. They've had a pretty good run here, but this is an area you feel comfortable with right now?
We do. I think it's a story about this macro environment we have. It's okay economic growth. It's good enough. That's an environment banks don't have to build up a lot of lost reserves. You're also seeing gradual Fed cuts on the horizon with a steeper curve. Great environment for financials. And then lastly, positive deregulatory tailwinds that banks are already seeing show up on their bottom line and ahead with further lending, especially commercial lending.
Gabriela, we're doing a special panel. I want you to say, please,